Welcome to another episode of the EmpowerYou Financial Podcast. I am your host, Eva Palacios.
And I am Damian McGee, your co-host. How are you?
Let's go.
Let's
that was good.
go. I'm never as excited as you, but I'm going to try it. I don't know how to do all that. But yeah, all right. See, that just made my back hurt. I don't even know what that was. No, I'm good. How are you?
I'm doing good.
I'm going to tell the listeners, I got in trouble because I always just go into the topic. Like, I'm not.
I know. Can we check in?
I mean, yeah, all right. We're here. That means we're both alive. Isn't that check-in enough? Like, we both showed up to shoot the podcast.
That must be a Marine thing.
It's got to be. Because when you walk in, I go, she's alive. We're good. Like, I'm not sure what else.
No, how are you?
Okay.
How's the week?
So, how are you?
Whatever.
No. You want check-in? Maybe the people want check-in because they want to know. So, how are you for the listeners?
I'm doing good.
Yeah. How was the week?
Amazing.
Yeah. How's the weather?
Whatever.
Is it good? It's good?
Anyways.
Is it raining?
Nobody talks about the weather.
No?
People who don't know what to talk about.
I talk about the weather. I travel all the time. That's all I talk about is what to pack and where I'm going.
Oh, man.
All right. So let's see. What else? Wait, what goes with? Okay. No, teach me something. How, when you check in, what do you ask people?
I don't know.
Like, okay. So listen, for people who don't know me.
Listen.
I'm the guy who, when I send you a text message, it's like,
are you alive?
It's like, hey, can I borrow that shirt that you had on last Thursday? And then when you go, yeah, no problem. I go, all right, cool. You good? Like, I don't like.
Definitely no warm and fuzzy feelings.
I don't know.
Sure.
It's not my specialty. It's not my specialty. My job is to like make sure you're good. Not a blanket. Blankets give people.
Not a blanket.
Blankets give people warm and fuzzies.
Okay.
Not a blanket.
All right, guys. He clearly doesn't care about how anybody's doing.
Not true. Just want to make sure you're good.
No. Okay. So no, seriously, man. What is this? Like our 5th episode?
4 or 5? What? 2, 3, 4, 5. 5. Yeah, I think 5. Dude, I made it 5 weeks. That means I lost my own bet. I bet that you fired me in 4. So
you got to bet with yourself.
Yeah. Well, yeah. I didn't not give anybody else my money. My credit coach wouldn't approve. But yeah, no, we're episode 5, huh?
Yeah,
that's pretty cool.
Yes.
How's it feel with a new host?
Aww.
Living up to the standards?
So far, keeping me on point.
Barely.
Like
it was like a test. You don't like the test, huh? It's like, let's see how much you know exactly.
You're really making me do some work.
Hey, I warned you. I warned you when we started. I was going to treat you as if I was a listener who did not know you and was like, I want to know everything.
I love it. Yes.
Good.
Definitely a different vibe.
Yeah.
I feel very structured and very intentional. A lot of meat, a lot of potatoes. Yeah. I'm like, oh my gosh, we telling everybody everything. We're like, nope. That's how we roll. That's what we're going to
do. Yeah. So. Well, and like we said, I mean, we always say, like, information is good.
Absolutely.
But there's still stuff in your brain that I'll never be able to pull out just because it's, like you always talk about, like, it's an equation. And I know we say that, but this whole credit thing, it really is a mathematical equation that only matches to each person's thing. So that's why I believe in us telling everybody all the stuff, because then they're like, oh, and what I believe too is when they figure out what you know, now they're regular credit repair people, they're gonna be like, hey, how come you ever talk about this thing? And their credit repair person gonna be like, because that's not in my collections letter kit that they sold me when I started doing this job. Yeah. So yeah, no, I think it's good. I think if people don't like it and they say I don't check in enough and they want less information, more check-in, I guess they can write us, and I'm gonna tell them to go watch reality TV. But whatever, we can try.
Oh man, no, it's been amazing. Since we started, we did a challenge, the 3D Master Your Finances Challenge, and that was amazing. Yeah, like people who upgraded to VIP. Being able, and for those who may not know, like, this is what I love. Like, I love getting to know people. I love to hear their financial journey, the hurdles, the hardships, and be able to look at their situation and tell them, if you do this, this, and this, like, it's going to get better. Yeah. And and to be able to see their expressions, like, seriously? Yeah. Like, for real? Like, that's all I got to do? That's all you got to do for right now to get you to the next level. And
you posted about some guy in the challenge.
Yes.
Heard you say something and save money or something. What happened with that?
Well, first off, shout out to the people, shout out to the listeners and my followers who shared the link onto their own social media platforms and in some private rooms too, because this gentleman came from a referral of of somebody that's in the Lions program. And this is why I'm like, guys, like share, you know, put all the good stuff that you're learning to inspire others and to show people that there's a different way.
Yeah.
He was a part of the VIP, and this was on day 3 that he told me his testimonial, and all the golden nuggets I dropped throughout those three days, he took what he needed for himself. And one of the things we talked about on day 1, which was, you know, personal finances, creating spending plans, know where your money's going, you know, make phone calls to either cut back on expenses or reduce bills. And he said that he called his cable service provider, and, you know, I told him what to say and he said it. And he was like, the lady was actually pleased that I called her asking for help, and she was extra pleased that she was able to help him save $80 a month.
Nice. Wait, that's $960 a year.
I know.
That's crazy.
Like almost $1,000 a year. Yeah. He is now going to be saving because he took time out and really he invested and got into the VIP, which was only $27.
Right.
So I was looking at him and I'm like, that is amazing.
So he made his $27 back with one phone call.
Yes, yeah. Absolutely. One phone call. That's just one.
Right.
Like, imagine like what else he's going to do. He also mentioned calling a creditor that had reported him late. I think over a year or 2 years ago. I think it was after a year, but before 2. So it was still
within that 2-year
window. Yeah. And he said that they would delete it for him and to get and to like update your credit report in 30 days.
Love it.
And I'm like, yo.
Well, not alone. I mean, that's going to be worth crazy points.
And not only that just validates.
Oh, yeah.
That what I am teaching and helping others do, they could do it themselves and they don't got to pay nobody to do it.
Yeah.
And if they do pay somebody to do it, doesn't mean it's going to get done right. Like, you have so much power. I think people just forget. I think people think, oh, you know, I'm facing the big banks. I'm facing these companies that have been around for years. And this is just how it is because this is how it's always been. Mm-hmm. No, make the phone calls.
It's kind of like the old, like, you know, the old Bible thing where it's like, what is it? Give a man a fish, you feed him for a day, teach a man to fish. And so, like, it's funny because that's how you do your credit coaching. It's, oh, I could be credit repair and send a bunch of letters or do this thing, and you'll never know what I did. You'll never know how it worked. You'll never know why it worked. You'll never know how to do it on your own in a year if something happens. Or I can spend some time teaching you what is happening, how it's impacting you, what to do, what not to do.
Yes.
And now, like you've said before, now not only do you have that information, but people around you start to have that information.
Yeah.
I mean, I've told you, like, when I was 17, I got my first credit card. So back, I don't know what was different, but it was a jewelry card, and they let me get it before I turned 18.
So you can floss with your watch.
That was it's officially, for those of you listening, that was officially my first collections account. I'm so proud of it. Yep. Stupid. Like, I was a kid. I didn't know what I was doing. But anyway, so, like, you know, my first account, few $100s, becomes my first collections account because I'm just immature and dumb. You know, my kids all have my Discover and American Express as their first cards on their accounts. So literally, they're waking up like 700s. Cool, I don't have to do nothing. Nope, don't touch anything. Yep. And they're like, all right. And what's funny is because you can show them the some of the tops, right? And so when I show them and when I'm like, trust me, don't touch it. And when they see the result, they're like, oh, okay. Now what else do I do? Right. Yeah. And so all the stuff I learned from you, I get to pass on to them information I never had.
Yeah.
So yeah, no, it's cool. I love that. That's what you're teaching people how to fish, so to speak.
And not to mention, this gentleman is a real estate agent on the East Coast. So we talking, I'm in Cali, he's in Massachusetts, on the opposite side. And he's a real estate agent. So all of the things that he's learned in those 3 days, he can now take and empower his audience.
Absolutely.
His potential future home buyers that may be experiencing hurdles or setbacks with credit that then prevent them from buying the house. Yeah. And that's what it should be about.
And money and credit is that one thing that, like, it's going to be universal no matter what.
It's not going away.
Yeah, it doesn't matter what part of the country you live in. Doesn't matter your politics,
just like the air
whatever.
That we breathe.
Yep,
we need
it's the same.
it.
Yeah.
Yes. So I love that. I love people sharing their experiences. Yeah, it's been amazing. It's amazing.
Nice.
So,
now you also have, maybe in a week or two, you have an event, your first live event.
Yes.
Right? Want to tell people about that real quick?
Yeah, definitely excited. Our first live conference here in Stockton, California, at the downtown University Plaza Waterfront Hotel.
Yep. And
I go way back with that hotel when I first, even before EmpowerYou was launched, and I started, my first business and doing seminars and workshops and things and trainings. We'd always do it there. So got a little bit, a little warm and fuzzy feeling taking it back, but now taking it back to do something that, I truly love and I'm passionate about, and something that is my own baby. So, pretty excited.
I'll have to put the website the website for them to buy tickets. I'll put it in the notes. That way, if there's still tickets available, they can pick them up and that kind of thing.
Yes.
That'd be cool for anybody who's in the area.
Absolutely.
Or wants to come to the area.
Yeah. I was always told, my top mentors always told me, do whatever it takes to get in the room. Mm-hmm. Get in the room with like-minded individuals. Get in the room with people that you aspire to be or want to have what they have, and learn what they're doing so that you can have the same.
I like it.
So, yes, everybody should. I mean, not everybody can be there, but we are hoping for a sold-out event.
I like it.
Which I do not doubt.
I like it. I like it.
Yes, it's gonna be dope. I'm really excited about it.
Good. All right, so that's check-in.
Are
we good with check-in? We accomplished check-in. We should get one of those, for people watching it on YouTube, we should get one of those boxes. It's like check-in, done. Right? That way they know. Okay. Can we go meat potatoes now?
Meat potatoes.
All right.
Let's go.
So we talked about, and you just mentioned it, so now I want people to know. When I first started, fixing my credit and started working with you, a credit card was a credit card was a credit card.
Yes.
I either got denied or I got approved. That was all I knew. Yeah. And then you spent months teaching me that is not the case. There are levels, then there's levels to the levels. And I was like, this just went from the easiest thing on the world to a physics equation, and I'm trying to figure it out. So
right,
we're going to help people understand just a little bit. And now what I know, and I'm going to let you, of course, fill it in because you're the expert.
Yes.
There are 4 levels of cards.
Yes.
Okay. I'm going to see if I remember them. Then you get to break them down.
Ooh, we testing you this time.
I know. And now I just forgot it
as
soon as I said that.
Student you've been.
All right. Credit number. The level 1s.
Yep.
Are your credit builder cards. No. Yes. No. See? Now I'm already scared I'm going to fail the test. Level 1 are your credit builders. And secured.
Yes.
Level 2 are your department store.
Yes.
Level 3 are your Capital Ones and credit unions.
Banks and credit unions, which is,
okay.
broad.
Okay. So banks and credit unions. And then level 4 are your Fab Fives. Those are the ones you want. That's what everybody's trying to get to, right?
Yes.
Look at that. All right. Let's start at the bottom.
You should tell us what level 1 is.
Nah, this is your podcast. That's your picture on the thing. People going to be mad. If I do it, they'll be like, I don't want to hear it. I'll be like, it's right. They'll be like, I don't care. I didn't tune in for you.
What?
So So I'm not going to do that to the people. I'm going to let you tell them. Let's start with level 4. Credit builders.
You mean level 1?
Yes, sorry. See, that's why you're doing it. Let's start with level 1s. Credit builders and secured cards.
Correct.
Explain those. Explain why they're good, bad, indifferent. What does that mean?
Mm-hmm. So, and this is, going back to how do I get my credit scores going in the right direction? Okay. The reason some people are able to see their credit scores increase faster, increase a higher amount in a faster period of time is because we're strategically building credit in a certain way. Okay. Opening any of these accounts will help you raise credit scores. The question is, how soon will you see your scores move? So, level 1 credit is going to be credit builders and secured credit cards. Secured credit cards. This is where you, in essence, go to a bank. Mm-hmm. Not all banks offer them, but go to a bank. And let's say you give them $300. In exchange, they give you a secured credit card for $300. So basically, you're giving them a security deposit in exchange for a credit card for you to use like you would normally use any credit card. And generally speaking, after 6 to 12 months of managing that account well, making all your payments on time and all that good stuff, they refund you your security deposit back. And now it becomes a regular unsecured card.
Got it.
That's a tool. A lot of the other guys will tell you that's where you got to start. Yep. You don't always have to start there. Yep. And I don't recommend starting there if you don't have to, because secured cards and credit builder cards, it generally takes 6 to 12 months of payments, of open account activity before it actually contributes to the credit score.
Oh, wow.
So if anybody is listening and they're like, no wonder my score hasn't moved. The other guys told me to do this, and I've had this account open for months, and my score hasn't gone anywhere. It's because it's a level 1 card. Wow. It's at the bottom of the totem pole. Yeah. It will help, but not until 6 to 12 months after the fact. Okay. That's a whole year of, in my opinion, wasted time and energy when you could be doing other things. Yep. Credit builder cards. These are generally the Fingerhut, First Premier, Credit One.
Oh, we talked about those last week, like those jewelry cards, all those randoms.
The My Jewelers Club, the Open Sky, the Loan Me. Once again, the other guys are going to tell you, open these accounts. Why? Because, let's be real, you're coming from a space where credit scores are low. They've helped you improve your scores. And now you get approved for your very first account. Yeah. That feels amazing.
It does.
And then you go to check your credit score and nothing happens. Yep. Anybody can qualify for these types of accounts.
Right.
Everybody gets approved for these types of accounts. Right. So at the end of the day, we need to be mindful and understanding, do we have to start there? No. 9 times out of 10, you don't. Mm-hmm. So if you can avoid those accounts, let's avoid them, especially the credit builders. Why? Very low limits, very high interest rates, generally speaking, monthly type service fees or annual fees. And these are the cards that if you don't use them once every 6 months, they're going to close you out due to inactivity. Right. So time wasters, frustration, hopes, you're hoping, and then it doesn't work. This is why.
So what if your credit score is just trash? Like it's just, you really, or at least you believe it is, and you have convinced yourself, those are the only cards I'm going to be able to get. Is that true? Like
No. Okay. Well, I mean, maybe. It just really depends. And this is why we got to get good at knowing, well, what is truly affecting our score? Mm-hmm. Now, if you've got unpaid negatives, unpaid collection items, level 1s and the credit builders and secured cards are the only ones you're going to be able to open with unpaid negative items on your credit report.
Right.
But that defeats the purpose. Like, why are we going to open up the level 1s
Let's pay the stuff.
6 to 12 months for our scores to improve, when if we've never actually fixed the negatives, you're wasting time and money all over the place.
Yeah.
So no, you don't have to start there. Can you? Absolutely. But in my belief, it's only going to either one, cost you more money to do, and two, waste time. And both of those don't make anybody feel warm and fuzzy.
Absolutely. Absolutely. Okay. All right. So those are level 1s.
Yes.
Level 2, department store cards.
Yes.
We talked about this last week. I was super happy when I got my little whack $300 from Kohl's. Like, what's the deal with department store cards? Good cards to have, bad cards to have. What's the deal with those?
Yep. So the department store cards, level 2, they're better than the credit builders and the secures. But again, you may not have to start there. Mm-hmm. Everybody's going to say, oh, just go get a department store card. Why? Because they approve everybody. Why do they approve everybody? High interest rates, low limits.
Yep.
You got to use them once every 6 months. And you're restricted. If you have the Kohl's card, you can only shop at Kohl's.
Right.
If you have Old Navy, well, Old Navy's a little bit different. You can do
Macy's.
Old Navy or Macy's, but you're restricted. Right. You can't take that department store card and go put gas with it.
Right.
So because you're restricted and confined, the criteria to qualify for those accounts are easy.
Right.
Why don't we want them? Again, for those reasons, high interest rates, low limits, they can close you out due to inactivity. But most importantly, those accounts also don't contribute to your credit score until 4 to 6 months plus after the fact. Okay. So, yes, do they help? They can. It really depends on, again, what that mathematical formula looks like. Now, I will say this. The only time I ever recommend a department store card for 2 reasons. Okay. Number 1, you're always going to shop there. So the whole, getting closer to inactivity, no problem because you're always going to shop there. Yep. Number 1. Number 2, by having the card and using it at the store, it gives you either rewards or a discount.
Okay.
So for example, Kohl's is a popular one.
Macy's
Target
does that a lot. Yeah.
Macy's.
Extra coupons or whatever.
Extra coupons.
Yeah.
But again, that only applies if you always shop there.
Yes.
So at the end of the day, I don't ever recommend department store cards unless it's super beneficial. Okay. Savings outweighs the hard work you got to put into it.
To maintain it.
To keep it open and active and all of that good stuff. Other than that, nope, you don't need department store cards. You don't need to start with department store cards to start building credit as long as your credit is looking a certain way.
Right. Okay. Mm-hmm. So that's level 1s. We don't really need them.
Nope.
Level 2s, don't really need them.
Kind of, but not really.
Level 3. Now I'm at the banks and the credit unions.
Yes.
Now, before you get into this, my thought would be, these are the banks. Why are they not the top? Right. And I know you'll get to the top, but what is it about banks and credit unions that puts them into level 3, not the level 4? And why are they not the best of the best? Like, what is that about?
Yeah. So banks and credit unions, it's such a broad category, right? Okay. And whether you're a bank or a credit union, every financial institution has their own internal criterias. So, for example, and this is why, me personally, I have like 7 different credit union memberships and I have 2 bank accounts. 2 bank accounts, 7 different credit union memberships. Why? Because every financial institution has their own criteria. But let's talk about the difference, because I don't believe a lot of people know the power behind being a member of a credit union. Mm-hmm. So credit unions in general, credit unions are financial institutions, but they are financial institutions that are created by a member base.
Right.
So, for example, whatever, all the teachers gather together and they make a teachers credit union or whatever it may be. So because it's a financial institution that's created by regular people like you and I who are members, they're for the members. So interest rates are a lot lower. Criteria to qualify are generally lower than banks. Very low fees, if any. Generally, anybody can open up a credit union savings account with as little as leaving $5 in the account. And now you're a member.
And they usually have a lot of like programs and like helpful stuff.
Yeah. A lot. Because again, they're coming from a space of let's make sure we are educating the world, the community, the membership base. Let's make sure that we're educating them for all kinds of reasons. But number one, to minimize losses.
Absolutely.
The more we give education, information, less expensive products, free products, the less likely the consumer may default on our products.
Absolutely.
So I love credit unions. And as a matter of fact, with my old employer, that's how I became very familiar with all the credit unions across the U.S. Because who I worked for, they partnered up with over 750 credit unions all across the U.S. Wow. So I know who the best of the best is and what services they provide for their members. So we always want to do a Google search, credit unions near me, and find out who in your area that you could open up savings accounts with. Because in order to take advantage of things like their credit cards, their auto loans, even sometimes mortgages, in order to take advantage of that type of stuff, you need to be a member.
Right.
And in order to be a member, that just means you just need to have a savings account with them.
Right.
And you can do that at any time, but the longer you have the membership for, the more credibility you have within that credit union.
Even if you're not doing credit. So like if I put $100 in credit union X and I just let the $100 sit there for 10 years, but then in 10 years, I'm like, man, I want to make this big purchase. Does that mean the credit union is like, hey, you've been there with us for 10 years?
Yes.
Or are they going to be like, dude, you only had $100?
No. When it comes to credit unions, it's based on membership activation date.
So they just want to know, like, yo, you've been rocking with us for a decade.
And most importantly, that you're not in a negative status.
Of course, right.
Yes.
You don't owe them money.
Correct.
But they don't care how much you have in there.
No.
They just want to know you've been loyal and faithful to us for this amount of time.
Absolutely.
Nice.
Absolutely. And the beautiful part with that, too, is because you're a member, whenever they do anything, you're getting an email. Hey, our auto loans are at this price. And when you get those in your email, now you have options. Now you can be like, oh, wait a minute, that credit union's offering a 3.9, but that one is a 2.5.
You know, I used to delete all that stuff.
No,
Before I started working, I used to delete everything that came in the mail. I'm like, they just trying to get me. And then I realized, like, oh, wait a minute, I should read this stuff.
And especially credit unions, because again, credit unions are for the people, not for the economy. So their rates are going to be a lot lower. And if there's ever any financial hardship, they're going to be the first ones to help you. So like, for example, when COVID had hit, my credit union sent an email and said, dear members, if any of you are experiencing any hardship or loss of income, give us a call and we'll defer your payments for 3 months. Automatically. Wow. You just all you had to do was call in and say, hey, I want to take advantage of the 3-month deferral.
Yep.
And what they did back then it was October, November, December, which that helps during the holidays.
100%.
October, November, December, they allowed me to skip those 3 payments and take those 3 months and just put them on the back end of the loan.
Nice.
So basically, allowing me to free up cash flow.
Without any damage. No, like nothing weird on your credit report.
Nope. No damage to the credit report. All you do is basically sign that you're extending the loan another 3 months. Yep. And hey, back then I was able to use an extra $350 a month for the next 3 months to use that and then, pay something else off with or cover expenses.
Absolutely.
So I'm all for credit unions. Banks is very general. But if we're going to start with building credit on level 3, I would go for a credit union first if you're a member. Or if not, I would recommend going with Capital One. Capital One, Quicksilver, or the Platinum card.
Okay.
Those are the stronger of the accounts compared to what other products they have. Okay. Because Capital One is such a huge bank, they have different levels of credit cards. They have the secured. They have the credit builder. Then they've got Quicksilver or the Platinum. We start there, which a lot of my mentees, I'm like, No level 1s, no level 2s. You can do it level 3. This is which one we're going to go after. Boom, let's get it. And then start building from there.
Yeah. Yeah.
And then my favorite is the Fab Fives.
Why are you jumping ahead?
Sorry.
I'm the co-host here. Jeez. See what happens, people? She won't even let me do my job. Fine. Let's do the no, I'm just kidding. So but before we jump to the Fab Fives, I wanted to say, like, that's a perfect example of what I was talking about when I said there's levels within the levels, right?
Yes.
And so just because, let's say, Capital One is a level 3 card, there are still levels to which cards within the Capital One structure to get, right?
Absolutely. Because a bank is a bank.
Yep. And
if they're a good bank, they will have different levels to serve all audiences.
Yeah.
We just need to know which cards fall under what level so that you can actually see your credit score move sooner rather than later. So in a perfect world, again, depending upon your FICO score formula right now, if, let's say, you cleaned up all the negative, unpaid, everything is zeroed out in terms of negatives. And now it's time to build. And you get that Capital One Quick Silver card. You can see your credit score increase within 30 to 60 days. Okay. Sometimes 60 to 90 days, just depends, again, on the bad past, if there's any. Right. But that's way sooner than level 1 and level 2.
Absolutely.
So, yes, that is generally my go-to card.
Okay. As the bottom. So your bottom is level 3.
Yes.
Got it.
Yes.
Okay. All right. Now, your favorite.
Yes.
Clearly so excited you couldn't wait till I got there.
Yes.
Level 4s, or as you like to call them, the Fab Five.
Yes.
Now, I have these memorized, of course.
Yep.
Because I have a little acronym that I always tell people. Do you remember my acronym?
Yep.
What is it?
Well.
Oh, you don't remember it.
I do, but go ahead and say it.
ABCCD.
Yes, because
American Express,
order.
Bank of America, Chase, Citibank, Discover.
Yes.
Those are the Fab Five.
Those are the Fab Five.
For the people in the back who were not paying attention when I just said that, they are American Express, Bank of America, Chase, Citibank, and Discover. Those are the Fab Five.
Yes. Break
down the Fab Five. Why are those your favorite, and why are they level 4s?
So these are the biggest nationwide banks that are the most popular. They have all kinds of products within themselves, but these are the banks that, number one, everybody needs to have all of them at some point in their life on their credit report. Why? Because they're the strongest. Okay. Nationwide, and for those who are still living in a time where they say, but not everybody accepts American Express.
Everybody pretty much accepts it now.
It does.
Yeah.
They do.
Because I used to think that too, but I'm like, I haven't been a place yet.
Yeah, maybe.
No, I've been in one place.
The mom and pops. Yeah. Like the little mom and pops. And the only reason is because American Express, like, they're the king of credit. Yeah. Their fees for processing and accepting payments are higher compared to Visa and MasterCard. So the mom and pops don't want to pay those types of fees. Yeah. But if you're like me, I'm like, I only roll with Amex, so you're missing out on money because I can't shop here because you don't accept it. Yeah. That's a whole nother story. But these are the 5 major banks worldwide, international. You can be able to, travel outside and still use them. But most importantly, these accounts, again, applying strategically and doing, building credit the right way, you can see credit scores increase within 30 days of getting these accounts because they're that strong. Yeah. And again, put yourself in the lender's perspective, in their shoes. When you're applying for credit, the first thing they're going to look at is credit score. Yep. If you meet their minimum score criteria, boom, you pass that with flying colors. Now they're going to look at the portfolio. Who is on your credit report? And not just who, but who of the who. Right. They don't want to see credit builders. Right. They don't want to see department store cards. They don't want to see secured cards. Right. Why? Because anybody can get those accounts. You're not special.
Right.
And in their perspective, they're thinking, well, these are bottom of the totem pole banks. Like, they approve everybody. I don't know if this consumer is ready for my type of account because they haven't practiced enough.
So does that mean you can have, because what I hear you saying is you can have a weak good score?
Absolutely.
Do you know what I mean? Like,
yes.
If you're only focused on the number, your score may not be as strong as you think it is.
Nope.
Interesting.
Nope. So going back to the whole credit report, or the report card analogy.
Yeah.
Right? You can go to school, get straight A's. Now you got a GPA. But what if those straight A's were in regular classes?
Gym.
PE, English, math A. I don't even know if that's still a thing. That was a thing back in my day. I was math A.
But like basics. All core stuff.
Basics. Yeah. And you got straight A's. And wow, smart. But you compare that with the report card that has stronger classes.
Physics, chemistry,
trigonometry.
Calculus. And all of that stuff. Yeah.
That's a whole different level.
Yeah.
So you take both of those report cards, which one is going to get you into that university? The one with the stronger classes, the APs, the honors, all of that.
Yep.
Same thing with your credit report.
Interesting.
Your credit score is one thing. The credit portfolio, whole different ballgame. Do you have good credit with just the credit builders and department store cards? Mm-hmm. Or do you have good credit with Fab Fives? Mm-hmm. The stronger banks. Those big banks nationwide, they offer really good limits. If you got good reports and scores, they offer great limits. They offer 0% interest on purchases and balance transfers. Many of them rewards, cashback, free flights, free hotels. So at the end of the day, we want to have these major banks on our credit report, not just because it looks good, because crazy as it may sound, you have enough strong credit. If life throws a curveball and you're late 30 days, because you have strong accounts, that 30-day late may not even affect that credit score.
Don't say that. Don't say that out loud.
I know.
People going to be like, wait, I got 30 days?
No.
Like, no.
No.
Yeah, no.
But
like,
I
get what
let's
you're
be
saying.
real.
Yeah.
Like, life hits. And sometimes we're like, oh my goodness, I can't believe that happened. And then people think I'm doomed forever. Not if you built a strong portfolio.
Well, and again, this is not advice. This is not permission to be 30 days late.
Definitely not.
It's different if I'm 30 days late on my department store card at a level 2. Now trying to get to a level 3 and 4 is super difficult.
Absolutely.
Whereas if I already have the Fab 5 and I'm late, then it's kind of like, I already got what I need. It's not permission, but like it's there, right?
But
like,
let's talk about that, because you being 30 days late on a department store card and trying to call them to get it deleted, they're going to be like, nope.
Laugh in your face.
They're going to be like, heck no.
Right.
They're going to be like, call the credit bureaus, have them do it, knowing darn well they are pawning you off because the credit bureaus don't control the reporting.
Right.
You have the Fab 5. A lot of them will give you a one-time courtesy removal, especially if you've always been on time with them.
Yeah.
I had one of my mentees. I was like, look, the November 30-day late, we're a few months from that.
Yeah.
But I don't know about that June of last year 30-day late. I said, but it's worth a shot. Yep. You call them because that account was open 5 years, perfect payment history, and had 2 lates last year due to a hardship.
Yep.
First and foremost, the moment you're late, you need to call.
Yeah.
Actually, even before that, if you think you're going to be late or you know,
call ahead of time
and ask for help.
Yeah.
But if you're late, you need to call immediately, because the more time that goes by, the less likely they'll do a deletion.
Well, because they're like, you didn't care. Why you care now?
In the first place, right?
Yeah.
But mentee told her, call, here's what you say, and let's just hope they remove both of them. Mm-hmm. I was like, November, no problem. I don't know about June. I like to kind of, set the tone with my mentees and don't give false hope. Sure enough, she's like, I just got off the phone with them and they're going to remove them both. I'm like, yes.
Nice.
This is why we need to know.
But those are one of the Fab Five.
That was one of the Fab Fives.
Okay.
One of the Fab Fives. And this is why we want to build credit with intention of building strong credit, having good relationships. Mm-hmm. These banks, amazing customer service. Mm-hmm. Amazing customer service. Where the other guys, you might be on hold for minutes or hours. They might hang up on you. Mm-hmm. Like, yes, we have to improve our credit so well that we can have multiple accounts with the Fab Fives.
So one more question, and we're going to have to make it quick because I think we're going to hit our time. But just because you said, and I only know this because I almost thought it, and then you told me don't do it. Just because you're saying these are the Fab Five, that does not mean everyone listening to this podcast goes, I got a 680. I'm about to go apply for all 5 of these cards right now. No. Right? Like, it's not that easy. It's not that simple, right?
Correct.
Like, there's a system to it.
Absolutely. Right? Absolutely. There's a system because every creditor has their own internal guidelines where while the world says, oh, you're 700 plus, no problem. You can apply for that and you'll get approved like flying colors. And I look at your credit report. I'm like, nope, don't even. Because now you just wasted an inquiry because it resulted in a denial. And then that creates frustration. No, we need to definitely look at the credit report to see where you stand. And especially if you need to make some moves, we want to be very strategic with it to make sure that the approval is, in essence, going to be a 100% approval and not a denial. Yeah,
because even within the Fab Fives, what will get you one won't get you another. And so just because they're all in that level 4, still not all the same rules.
They all have different criteria, all of them. And I've been around long enough, so I know the criterias.
I like it. All right, we're going to recap real quick.
Yep.
4 levels. Mm-hmm. Level 1, credit builders, secured cards.
Yes.
We do not want those. They don't report fast enough. They don't give you the bumps you think they're going to give you, and many times they're going to cost you more just with fees and monthlies and whatever. So that's not where we want to start, even though the other guys say to do so. Level 2s are your department stores. Mm-hmm. And although those are a little bit easier to get, we also don't want to do that because they're restrictive, right? They keep you in that store. Yep. But more importantly, what you were saying, you have to repay or you have to use them every 6 months. And again, they're not delayed reporting, not going to give you the points bump that you think and all that kind of stuff. So level 1, level 2, we want to stay away from them.
Yeah.
Level 3, banks, credit unions, correct? Mm-hmm. Okay. Those we want.
Yes.
And those we want for multiple reasons. I won't go back through all of them, but credit unions, you want the credit union because you want the relationship with the credit union and all it has to offer. Mm-hmm. The banks, if you're going to go with just a bank, then we want to look at the Capital One cards. But within that, there are levels
definitely
to that. But you want to look at a Capital One. If you're going to do that, try and start with a Quicksilver.
Yep.
And then finally, the level 4s are our illustrious Fab Five, which is A, B, C, C, D, American Express, Bank of America, Chase, Citibank, and Discover.
Yeah.
Correct?
Got it.
I don't need to get it. They need to get it. So that was for y'all. I'm trying to pass this test so you can pass this test. No, I love it. That was one of those things that when you were explaining to me, I was just like, what? Like, it took me so long. I was just like, no, it's a credit card. Like, it's plastic. It's got a stripe on the back. And you're like, nah. And I'm so complicated. But like you said, it's good to know. And now what's funny is when I look at the store and I go somewhere and they're like, hey, this is Nordstrom. We'll give you the whatever. I'm just like, I'll just use my American Express. Like,
or do you want to save 20% on your purchase today?
Yeah.
Let's get you approved for blah, 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 blah.
Yeah.
Yeah. No, guys.
No, I'm good. Thanks.
Fall for it.
I'll take the MX points.
Yes.
Use it on my flight.
That's right.
Yeah. All right. That is it for the week. Thank you for letting me be around for 5 episodes. Yay. I'm not checking my mail this week, so if you try to fire me before 6, not going to work. So I'll be back again. Yeah, that's it. Thanks, everybody, for listening, and we'll see you next week.
Thanks, guys.
Take a look at what you see, what I become. It ain't hard to tell. Young legend, I'm an icon.